Hello, everybody, and welcome to our webinar, How to Review COIs and Endorsements for Compliance. I hope you all are having a nice Wednesday. Let me get my video on here. I am coming to you from New York City, where it is very rainy and windy, and I'm hoping that you all have better weather wherever you are. We are going to get started in a second, but I wanted to go over some information before we get too far underway. If you have any questions for me, please feel free to pop them into the Q&A section of the webinar chat. Please avoid putting them in the chat section, as it will be easier for us to answer in the Q&A section. However, if at the end we have any questions in the chat, we'll do our best to answer them. Additionally, all questions will be answered at the end of the webinar, so feel free to pop them in as you have them, and then we'll go over them in a question and answer section at the end. My contact information is in this presentation, so you will be able to reach out to me afterward if needed, and we can cover some additional information there. I promise you, looking at the screen, my camera's off to the side here, so sorry about the averted gaze. I'm going to go ahead and get us started here. So I am coming to you from Jones. Jones is an insurance compliance solution for property management and construction. We basically help you gather up your insurance documents. We audit them for you. We notify vendors, tenants, subcontractors, contractors of their compliance status and enable you to effectively get renewals for your insurance documents and get compliance documents if the original ones were not compliant with your requirements. If anyone has any questions about what Jones does or how we might work with you, please feel free to reach out to me. Again, my information is in this webinar. Additionally, we do offer some capabilities with MRI that we're happy to discuss with you as well as a few other integrations. So this is a little joke we like to make. It seems that everybody in the old kind of world of managing COIs, everybody is kind of gathering documents here in a pile. And we are hoping that in the new Jones world, everybody is just storing them easily on their computer. I did notice a raised hand. Unfortunately, I'm not going to be unmuting anybody to ask a question today. So please feel free to just pop your questions into the Q&A section and we will get to them at the end of the webinar. If you have anything you would like to ask me about specifically afterward, please feel free to email me. My information is at the end of the presentation. So my name is Margaret Christie. I am a customer success manager here at Jones. So basically my role here is to help you guys get the most juice out of the Jones lemon is the way I like to describe it. So for our customers, I'm here to really help them explore the product, get to know it. And I also do these educational programs as well, so that hopefully everyone feels empowered to manage compliance at their property. So today we're going to talk about a bunch of different topics related to compliance. We're going to start with talking about why compliance is important. Some of you may just feel like it's something that you're required to do. We're going to talk about that, kind of the limitations there. We're going to talk about your requirements. You can only check for compliance if you know what you're checking something against. If you don't know what your requirements are, then there's no way you're going to be able to check a certificate of insurance or any other insurance document. We're then going to cover certificates of insurance. We're going to talk about the most common policies that you're looking for on a certificate of insurance. We're not going to talk about everything under the sun. We'd be here for the next year, but definitely the greatest hits. And then we're going to talk about endorsements and other provisions as well at the end, and then we'll have some space for Q&A. So to get us started, why is compliance important? There are several reasons you might want to make sure that you're compliant. One is to protect your team. As a property manager, it's really important that you make sure that all of your vendors and tenants or contractors, subcontractors are compliant with their requirements at the property. This is part of your job description. Obviously, you want to make sure that you're doing all of that. Additionally, your property may be audited by the company you work for or even an external organization, and they may be evaluating risk at your property. You want to make sure that your property is protected and that you're going to have a good result on your audit. And then lastly, of course, liability. If you experience a liability event and have an uninsured loss, this is going to be, one, probably pretty expensive, and two, can be damaged reputationally for your company. Additionally, if you experience a loss at your property, it may be really difficult for you to get insurance in the future, as your rates can really go up if you have an uninsured loss. So we are going to dive into your requirements. Where do they come from? Where can you find them? I'm not going to go into too much detail on exactly the specifics of abstracting, but we can talk about where these requirements typically show up. So first, you may have standard insurance requirements. So this may be a set that you're requiring all of your vendors or tenants to meet. They may vary by risk level. So you may have like a low, medium, high risk. You may have a standard set of requirements, maybe standard plus cyber liability or standard plus environmental liability, depending on the type of work being performed. If you have those standard requirements, those are the easiest way to be checking for compliance. You should definitely use those. For your tenants, you may not have standard requirements. You may have leases. What is typically the case is that most companies do have standard requirements they would like their tenants to meet, but in many, many cases, tenants end up negotiating those standard requirements, and therefore they can vary tenant to tenant. This may also vary depending on the type of business that your tenant is running on your property, right? You may require liquor liability if they're serving alcohol or something of that sort, plate glass maybe in a mall. Additionally, leases can be grandfathered in from prior ownership or management. So it may be that older leases have very different requirements than newer leases. Lastly, service agreements and contracts. You may find a specific contractor service agreement with a particular vendor, contractor, subcontractor, and you may have specific rules for them that you have. If you are using Jones, all of these requirements are abstracted for you and put onto our platform, where we can automatically check your insurance documents against them. So now that we've gone through our kind of basic standards of where we're looking for requirements and why we care at all, we're going to move on to probably the meat of our presentation today, which is reviewing certificates of insurance. A lot of you probably know these as COIs. So let's go ahead and dive in. So how do we know what insurance somebody has? We want to check their certificate of insurance. This can appear in a lot of different forms. The one that I have on the screen here is going to be the most common way that you're going to see this evidenced. This is an Accord 25 form. You'll note that it says Accord here. Oh, I'm so sorry about that. It says Accord here at the top and also at the bottom, and you're seeing the form number here at the bottom. It says Accord 25. You're also seeing some numbers next to that Accord 25. That is the edition year that this particular form was designed. Every now and then, the industry group that designs this form releases a new version. So those are going to be the numbers next to the Accord 25. Like I said, this is going to be the most common. You may see other types of evidence of insurance as well. It's important to check your requirements. Your company may have policies around which types of forms you're allowed to accept. You may see memorandums of insurance or MOIs. You may have policies to accept those or not accept them. So it's really important that you're checking with your risk team to make sure you know what you're supposed to be doing. Certificates of insurance summarize the insurance policies that a tenant or vendor carries, or contractor, subcontractor, if that's the case as well. It's really important to understand that these are a summary. They are not legally binding documents. They just evidence what insurance the vendor or tenant is carrying. Now, you may be wondering, Margaret, if they're not legally binding documents, why in the world are we using these? And why are we collecting them? Well, the reason is they are very, very useful summaries of all of the different insurance policies. that someone is carrying. So as you look at the COI, you'll see that there are different sections on it, and these are all different insurance policies. Now, if we had to review every single one of these policies in its entirety, that would take us and you a really long time. So this is a quick way to check and confirm the insurance somebody is carrying. The only person who is putting their name to a COI is actually the broker that produces it. So it's not the insurance company necessarily that's producing it, although sometimes that happens. It's typically just the broker. And the reason that I want to call out that this is not a legally binding document is that you may sometimes be requiring legally binding documents. Those would be endorsements. I want to call out the difference now so that when we talk about endorsements later, you understand why someone would want to ask for them as opposed to seeing something just on a COI. We can talk about that a little bit more when we get there. And then we also here at the bottom have our endorsements noted. Endorsements are actually an amendment to the insurance policy itself. They change the nature of the insurance policy. Many of them override the insurance policy if there's conflicting information. There's different wording in there. So it may be important to collect other documents in addition to this particular document. What are we going to look for on a COI? These are the most common things. Jones works with thousands and thousands and thousands of COIs, and I can tell you this is what we are looking for the vast majority of the time. Sometimes there are additional things that come up, but typically this is going to be what we are checking for in the most common context. We're going to go by these one by one. So we're going to start here with the insured. So what is the insured? The insured is an entity name that is going to be on the COI, and this is the person who is insured by the policies on the certificate of insurance. It's going to be right here. It's really important that you check to make sure that the insured matches the name of the vendor or tenant. I know that that sounds silly, but you definitely want to make sure that the COI is for the right person. They may have a DBA name, but it's important to check this, and this is always the first thing that we check here at Jones. The next entity that you're going to want to take a look at is the certificate holder. So this is going to be here at the bottom of the page. The certificate holder is the entity to which the COI has been provided. So basically, the certificate holder is you. If you're the property manager or a person collecting COIs, this is who this COI was made for. And being the certificate holder on the COI means that you will receive the mail, basically related to the COI. That's the way I like to say it. It's the easiest way to remember it. You are going to be receiving renewals. You're also going to be receiving notices of cancellation. So that is what you get when you are the certificate holder on a COI. It does not extend any sort of coverage to you. Like I said, it's really just where the mail goes. The first thing that we're going to look at when actually reviewing the policies is general liability. This is at the top of our list here on the COI. It's the first policy we're going to be looking for. So what is general liability? General liability covers four main categories of claim: bodily injury, property damage, personal advertising injury, and products completed operation. So this is the last one is going to be usually the case of a requirement when you're doing something construction related. So bodily injury, pretty simple. One thing to note that this is bodily injury to a third party. So this does not mean that HVAC experts, the insured on our COI, is covered against bodily injury here. It means that if they hurt somebody else while they were doing work on your property, then that injury to someone else would be covered. Property damage, again, does not cover their own property. It does not cover HVAC experts' equipment. It covers any property that they might do damage to when they're doing work at your property. Someone else's stuff, basically. Personal advertising injury is something intangible. So let's say reputational damage or something of that ilk. Where are we going to find it? Here at the top, we're able to see a couple of different things here. The type, We're able to see the policy number. Always want to make sure that the policy number matches any endorsements related to general liability. And then we're going to see some limits here at the end. Now let's talk about those limits. There are 6 limits explicitly written in the general liability section of COI, and they each are different. So each occurrence would be the amount that we're paying out per liability event. General aggregate would be the total that the insurance company will pay out within the policy year being the effective dates here. Damage to rented premises, medical expenses, personal advertising, products completed operations. So the things that we talked about a little bit earlier, and you're going to find these here. The information about each occurrence and general aggregate is going to be useful every time we're talking about these liability policies. So I'm just going to quickly explain what those things mean. Each occurrence, like I said, is the maximum amount the insurance policy will cover per each liability event. General aggregate, again, is going to be the total per the policy period. So if I had a general aggregate here of $1 million, which is exactly the same as my each occurrence, if I had an accident in January that needed $500,000 worth of coverage, and then an accident in February that needed another $500,000 of coverage, and then an accident in March, I don't know what's going on here, that needed another $500,000 of coverage, we'd be out of luck for a March accident because we had reached our general aggregate limit of $1 million with our first 2 accidents. So that's how this works. And typically, or most commonly, you see the general aggregate being a little bit higher than each occurrence, though not always. Now we are going to move on to talking about automobile liability. Automobile liability is really easy to understand. It is also a very general policy, just like general liability, which is, of course, the most inclusive. However, general liability doesn't cover anything that has to do with a vehicle. So you need automobile liability to cover those types of liability events. If you guys are familiar with car insurance, this is like car insurance, but for a business. So what is automobile liability? Just like general liability, this covers claims for injury or damage, but again, it occurs with a motor vehicle. For this reason, if you have a vendor or tenant operating vehicles on your property, you may wish that they carry commercial automobile liability insurance. So we're going to find it here on a COI. This is always just underneath general liability here on the COI. Now we're going to talk about the different types of automobile liability that you're going to encounter for COI. So who needs it? You're typically going to be requiring automobile liability if the business owns, leases, or rents any vehicles, employees drive their own vehicles onto the property while conducting business. And you're going to find this right here. Our different types of automobile liability are any auto, all owned autos, hired autos, non-owned autos, and scheduled autos. We can see them right here. So as you can see, this COI has coverage for hired autos and non-owned autos. I'm going to quickly explain what each of these categories mean so that you will know. This is actually a question I get a lot here at Jones, the different types of automobile liability insurance. So the first one is going to be inclusive of all the rest. Any auto means any automobile that this vendor or tenant, contractor, subcontractor is operating on your property is going to be covered. All owned autos will be any automobiles owned by this business. Hired would be anyone that they're renting, leasing. Non-owned, kind of another category. They don't own it, maybe they're not renting it, anything that they don't own. And then scheduled autos. Anytime you see the word scheduled in an insurance context, it's just going to mean discreetly listed out. So if you see something scheduled, that means you're going to want to see a schedule or a list of all of the autos that are covered. So the policy would quite literally say, green Toyota Camry, this is the plate number. Gray Honda Civic, this is the plate number. It would literally have them listed out. And like I said, anytime you see scheduled in an insurance context, you're going to be looking for a discrete list of the things that are covered. Now we're going to be moving on to umbrella liability, which always sits right underneath general liability and automobile liability, the third part here. So what is umbrella liability? Umbrella liability basically goes above and beyond to cover other policies, general liability, automobile liability, employer's liability, workers' compensation coverages, when those limits have been exhausted. So earlier I gave you the example of a company that had a liability event in January that was $500,000 worth of damage. Another one in February that was $500,000 worth of damage, and then a third one in March that was another $500,000. But because they had exhausted their $1 million general aggregate limit of their general liability policy, they're out of luck to have the March one covered. Well, since they have this umbrella policy down here, not so. They have an extra $5 million to use to pay out for that March accident. So what does that mean? You can always find it right here. It means you can use it to satisfy other policy limit requirements when auditing a COI. So when you're checking, you can use it to meet a requirement. So let's say that your requirement was that this vendor carried $3 million worth of general liability. Now, obviously they do not. It's $1 million on this general aggregate, but you could say that this vendor was in compliance with your requirement because they have an additional $500,000 of umbrella liability. You can also add that to the limits in this box below for workers' compensation and employer's liability, as well as for automobile liability. This is most typically the case. This would be standard practice when auditing. It would be industry standard for sure. I think we have one customer here, Jones, who doesn't let us audit that way. So if your company has a specific requirement around this, it's important to understand their rules. But for the vast majority of cases, you can do this when auditing to make sure that somebody has sufficient coverage. And again, here it is right here. Workers' compensation is going to be our next box. This is always sitting in this place on the COI. We have workers' compensation and employer's liability sharing some space here. So we're going to start with workers' compensation. What is workers' compensation? It's insurance that covers medical expenses of injured workers for work-related accidents and compensates them for lost income from work-related injuries. An important thing to note is that this is a no-fault system. So it doesn't matter why the injury occurred. It just matters that the injury occurred while someone was doing work. I actually, when I was in college, was an intern at the Museum of Modern Art here in New York City. I know you're all wondering, how in the world did you go from that to working with insurance? I would just say I love working with insurance. And yes, art history majors can get real jobs. Anyway, I was working at the Museum of Modern Art and I had to go to Home Depot to pick up some wood. And unfortunately, the bundle of wood broke and dropped on my foot, and I had an injury. I actually did have workers' compensation cover my foot injury when I was in college. That was my first brush with the insurance world. So this is something that pays out. Again, it was not necessarily while I was even at my place of work, but it happened while I was working, doing a task for work. And again, it was just the faulty packaging at the Home Depot. It wasn't MoMA's fault, but I was still covered. Now, the funny thing about workers' compensation is that it's actually mandated by state law in many cases. So this does vary from state to state. There is one state that does not require there to be workers' compensation policy. That one state is Texas. Of course, it's Texas. As a Texas native, I can say that. But that is a state that does not require statutory limits. So if you are managing a property or operating something in Texas, your vendors and tenants can rightfully refuse to provide statutory limits for workers' compensation. That said, each state does set a mandatory limit of the coverage that is required for workers' compensation. And you will always want to see that box checked on the COI. So here we have it, this workers' compensation statutory limits. You're going to want to see that checked to ensure that you're having these statutory limits met. There are a couple of other states that have some funny rules around this, but vast majority of cases, you're going to want to see that checked. Just because a state has mandatory limits or statutory limits for workers' compensation does not mean that you can't require more. I would say in the vast majority of cases on Jones, I see the requirements exceeding the statutory limits per state. So sharing this box, we have employer's liability. Employer's liability is different than workers' compensation. What is the difference? Workers' compensation, again, is insurance that covers employees' medical expenses or lost wages due to work-related injuries or illnesses. It pays out claims regardless of who's at fault. It's a no-fault system. Employer's liability is actually covering the employer. So if an employee were to sue due to a work-related injury, employer's liability would be covering the employer against that suit. So that would be the purpose of having both. Now we're going to talk about property insurance. Well, actually, let me go back a page. As I said, on a COI, you're always going to see general liability, automobile liability, umbrella liability, workers' compensation, employer's liability. On my COI, you can see I have business personal property in this space at the bottom, and that's what we're going to see next. But I want to note for all of you that that is typically kind of a free box on a COI. You may see something in there, you may not, and it might be flood insurance, it could be, which I guess would be property. It could be plate glass, liquor liability, could be a lot of different things, cyber liability. So you're really going to need to check to see what is in that box when you get it. So now we're going to talk about property insurance. I have a couple of different examples of ways that you can see property insurance evidenced on a COI, but there are other ways as well. Sometimes I'll see a note on a COI that says to look at another form to see property insurance. I saw one of those today. There can be different ways that this is evidenced. So just be aware that it's not always going to look as clean as the policies that we've discussed prior to this point. So these two documents actually have the exact same coverage on them. Note that this one over here is the COI, the Accord 25 that you and I have been looking at this whole time. And then the other one, you'll note at the top, it actually says Certificate of Property Insurance instead of Certificate of Liability Insurance. And this one has a different code. It's an Accord 24 rather than Accord 25. And then it has a whole section specially laid out for the property insurance. You can see, like I said, that this is the same type. Note that this is special. This is special. This one has the same limits as the other policy as well. So this is just two different ways of seeing the exact same thing. Now, let's talk about what property insurance actually is and why you might require it, because this is actually something that I think is frequently really confusing for vendors and tenants. I see it specifically, tenants are often confused by this. I see in a lot of like retail settings often, high requirements for property insurance, and then tenants don't understand why they need to have it or don't want to provide it. So let's talk a little bit about that. So property insurance covers the insured's physical assets. So basically, if I had a COI and on it I had property insurance, that property insurance would be covering my own stuff, so the insured stuff. Note that when we were talking about some other things earlier, we were talking about damage to third parties, but for property insurance, we're going to be talking about damage to your own stuff. So in the insurance world, there are two types of property that can be insured: real property and personal property. Real property refers to land, physical structures, and typically landlords are going to be carrying this real property insurance. This is not something that you're going to often see required for anyone else. We never really see it. So vendors and tenants don't usually need this type of insurance. Personal property refers to movable property that's not fixed to the building. So that could be furniture, fixtures, but also betterments and improvements. So for example, I'm in an office now and we built out our own kitchen in this space. Our own kitchen is a betterment or an improvement that we made to the space. We also built a wall. That would be a betterment or improvement. So that would also be covered by this personal property section. That wouldn't be considered real property. So in the case of vendors, you would typically see tools, equipment, machinery, anything else that they're bringing on to the premises. Sometimes you won't even see something that says just property. You may see insurance actually for specific types of equipment. So it may be that you see insurance for specific things, for boilers, for different things like that. And so that would also be considered property insurance. It just may be that the vendors have requirements, have policies that cover their specific things that they're bringing on. So on to the most common types of property insurance we see required: basic, broad, special form. We are going to start with the least inclusive type of insurance. So in this case, it is going to only cover the things that are listed here. Basic form property insurance only covers these listed perils. I'm not going to read them, but this would be the only thing that's covered. Broad form is going to cover everything listed above, plus some additional perils. So these are the additional perils covered. Special form, which is actually the most common type that I see coming up in retail setting, is going to cover only things. It's going to not specify what it covers, it's going to be specifying what it doesn't cover. So rather than being inclusive, it's exclusive. So for special form, it does not cover those following things. Notice that earthquake and flood are in there. The reason that I bring that up is that I very commonly see an insurance requirement along the lines of special form property insurance plus earthquake and flood. So the reason that all of those things are required is because, of course, special form does not cover earthquake and flood. Now we're going to review liability versus property insurance. I gave you a little sneak peek of this earlier, but basically the difference is liability insurance is third-party insurance. This is going to be covering damage that you're doing to others. And an example of that would be if ABC Construction showed up at a building owned by XYZ Realty and they damaged a wall, ABC Construction's general liability would cover the damages there. Property insurance would be something along the lines of if ABC Construction suffers damage to one of its machines while working at XYZ Realty's property, their property insurance would cover the machines. An important thing to understand here is why on earth you would want somebody to have property insurance for their own stuff. I mean, what's it to you if their stuff gets damaged? It's not your problem. Well, at least you hope they feel that way if it happens at your property. You can imagine if you had a vendor coming into your property, they brought on their tools and equipment, and then something happened to your property. Let's say there was a flood and all of their stuff got ruined. If they don't have insurance to cover their stuff, they are more likely to sue you for damage than if they do have the coverage. So that's why you would want somebody to carry this type of insurance. Again, same with tenants. Like I said, at retail properties, I see this very commonly because there is so much property within a retail setting. Retail tenants often have to carry quite a bit of property insurance just in case, so that if their inventory gets damaged, they are not going to hopefully sue the landlord. Now we're going to talk about the additional insured. This is something that is really important. So this is an entity that you definitely want to make sure is correct on the COI. Earlier, we talked about this entity up here, the insured. This is going to be who is covered by the policies on the COI. We've also talked about the certificate holder. Again, this is who receives the mail. There's no insurance coverage involved. Now we're going to talk about the additional insured. In this case, we're going to find it in our description of operations box, or we may find it on an endorsement, which we will cover later. Now, the additional insured is going to apply to only certain policies. So how are we going to find out which policies it applies to? You can check this column here. It says ADDL INSR, additional insured. And if you have a Y in there, you can see that this applies to that policy. If you have a not applicable, it's not applicable. An N would be a no. So what is it? Now that we found it, what is it? Additional insured status extends the protections and benefits of an insurance policy to parties not named as insureds. So let's say that I own a building and I'm having HVAC Experts Inc. come onto my property to do some work. I might require them to add me as an additional insured because I want their insurance to also cover me. You're probably thinking, well, yeah, I mean, you already have your own insurance too. The game of insurance is just overlap, overlap, overlap. You want as much coverage as you can. That's always the goal. And so if you can have your vendors and tenants cover you as well, then why not ask them to? So in this case, additional insureds are going to be protected under the policy from claims or lawsuits that might be filed as a result of the name's insured's negligence. So you definitely want to make sure that if this is a requirement, you are making sure that the entities listed as additional insureds are correct. So that would be coverage of the additional insured. I did have someone actually ask me the other day, let's see, it was a property management team, a vendor had emailed them and said, hey, I can't get all of these entities that you're requiring on the additional insured, but I can add them to certificate holders. Is that okay? And I told them, no, it's not okay. Those are two very, very different things. One of them gets insurance coverage and the other one gets mail. You definitely want to make sure that you're not letting those get mixed up. So now we're going to talk about the waiver of subrogation. Let's find it, and then we can talk about what it is. So in this case, the waiver of subrogation is going to be in the same place as our additional insured, although just like the additional insured, it could also occur in an endorsement. So here we are. Which policies on the COI are covered by the waiver of subrogation? You can check this in the column next to the additional insured column. So same deal here. What is a waiver of subrogation? You can really impress your friends who work in commercial real estate with this one because almost nobody knows what a waiver of subrogation is. So let's explain it. You have rights to recovery. So when an accident occurs, you have the right to get coverage, financial compensation for that accident from anyone who caused the accident. And I'm gonna give a more concrete example of this in just a second. Transfer of rights of recovery. You can collect funds from your insurance company in this scenario. In doing so, you, the policyholder, are giving your rights of recovery to your insurance company. So this would be the transfer of rights of recovery. And then subrogation is when your insurance company goes after the original negligent third party that caused the harm. So in a more concrete example, let's imagine that I walked into a coffee shop and I slipped and fell and broke my ankle because the floor was slippery and there was not a sign anywhere telling me that the floor was slippery. I may go to a hospital and my health insurance may cover the medical bills. Now, my health insurance may then go to the owner of that coffee shop and say, hey, we had to pay for Margaret's injured ankle, but you're the person who caused it. So I think you should pay us back because you're the person who's negligent caused the accident in the first place. And if you had never been negligent, we wouldn't have had to pay out any money. So that's a great example of subrogation. Subrogation would be my health insurance going to the coffee shop and saying, hey, you got to pay us back for paying for Margaret's care. So a waiver of subrogation basically is saying that your insurance company promises that they will not subrogate a negligent third party, meaning they will not go after a negligent third party to try to recover anything that they're paying out. And now you know what a waiver of subrogation is. Here is it in this box. Notice of cancellation. This one is really, really easy. A notice of cancellation obligates the insurers to provide notice to the certificate holder, again, the person receiving the mail, if an insurance policy is canceled or not renewed. This can be something that it can be kind of hard to get. I see it commonly as an issue on COIs. One thing to note here, and kind of the worst case scenario for this would be if you had a vendor or tenant coming onto your property and they purchased enough insurance to get a compliant certificate of insurance, they showed it to you, and then as soon as you accepted it, they went and canceled all of the insurance because they didn't want to pay for it. That would be very nefarious of them, and definitely not something that one hears about frequently, but that's kind of the worst case scenario and why you might want to have a notice of cancellation. Typically, we see a requirement for a 30-day notice of cancellation. It may also appear on an endorsement. We might see it here in the description of operations box on a COI. And like I said, typically this will be 30 days, which is what I have here. I have seen other, stranger numbers, 30, 60, 90. I have one customer who has 20. Another customer I saw the other day had 3 days, which we all thought was a typo for 30. We reached out to them and they said, no, it's 3. So sometimes you'll see outliers here, but the most common thing is a 30-day notice of cancellation. So endorsements and other provisions, and I want to stop here really quickly to see, I do see some questions coming into the chat and I will address them at the end. So if you have anything that you have a question about, please feel free to pop it in there. So moving on to endorsements and other provisions. These are the endorsements we're going to be covering. Before I go through them, at the beginning of this presentation, I told you that certificates of insurance are not legally binding, meaning if there was a liability event and you had a certificate of insurance saying that that event should be covered, and you went up to a court of law and you held up your COI and you said, see, look, it says they have coverage, that actually does not mean that the insurer would be obligated to pay out if the COI were fabricated, which does not happen often, but has happened occasionally. Always make sure your COIs are signed by an insurance broker. But this is why you may choose to request an endorsement. An endorsement, as I said earlier, is an actual amendment to the insurance policy. It can override prior language in the policy, depending on how it's worded. And so this is actually a material change to the policy itself, which of course is legally binding. And so you may wish to require an endorsement so that you have a higher standard of proof for these things. This is really just up to the requirements that you have where you work, and you definitely want to make sure that you're just enforcing what you're asked to enforce. So if you're not asked for a separate endorsement, then don't chase it because it will be a lot of extra work for you. So these are the endorsements we're going to be talking about today: additional insured, ongoing completed operations, waiver of subrogation, primary non-contributory, 30-day notice of cancellation. There are only 2 of those on there that we haven't talked about yet: the ongoing completed operations and the primary non-contributory. We are going to talk about them, but the rest we've already seen before, and we're just going to be seeing what they might look like in a separate endorsement as opposed to evidence on the COI itself. So here, this is an additional insured endorsement for ongoing and completed operations. So I know that that's a little confusing because it's 2 things layered together. Remember that an additional insured is just somebody who is also covered by the policy. And so an additional insured endorsement is always going to apply to a specific policy. Remember when we saw that on a COI, we were seeing if the additional insured applied to, the different policies. So if you see an additional insured endorsement, it could say additional insured for general liability, additional insured for automobile liability, whatever the case may be. In this case, this is an additional insured endorsement for ongoing and completed operations, which we have not talked about up to yet. But basically, this would cover anything that is, basically this is going to cover when work is being done and work is completed at a property. Typically, this is going to have to do with some sort of construction that's happening. So ongoing operations would be incidents that are happening while work is occurring, and completed operations would be incidents that happen after work is completed. So for example, let's say that you had a contractor at your property putting up a shelf, pretty simple, but while they are putting up the shelf, they accidentally punch a giant hole in your wall. That would be something that would be covered during ongoing operations. Let's say that they do manage to get that shelf up there and it looks good and they leave, and 2 weeks later, the shelf falls down and rips another big hole in your wall. That second big hole that happened after they had left the property, after they completed work, would be covered by completed operations. So on these forms, we can see it says additional insured. And then we can see also that they have some codes that are a little bit different than the ones we saw before. Previously, we saw some Accord forms that said Accord 24 for a property insurance form, and Accord 25 for our classic certificate of liability insurance. In this case, these are ISO forms or Insurance Services Office forms. You can see it says at the bottom, and they have codes that are specific to this coverage. If you can see, it says a CG 2010 and a CG 2037. You will see also you have the 0413 after them. That is again the addition year of these forms. As I mentioned earlier, these insurance groups do update these forms from time to time. And so you may see the addition year change. Typically for ongoing and completed operations, you may actually see a requirement for a CG 2010 or a CG 2037. Your requirements may not say ongoing completed operations. They might just say CG 2010, CG 37. This is what they are referencing. If your requirements require a specific form, make sure that you're looking for that form. If they just say that you're requiring a certain policy, then you can accept it evidenced in any which way. Like I said, I am showing you an ISO form today, but you may see this on a bunch of different types of form. For instance, sometimes I see endorsements on forms that are specific to insurance companies. So I might see one for Chubb or the Hartford or something like that. So they can look a little bit different. So it really just is down to your company's policies on whether or not you're going to accept them. So in an endorsement, we want to know also who is covered. So in this case, this is an example of a blanket endorsement. You can see it says all persons as required by written contract here. So if you see a form that says it has blanket language in it, you would want to go then look at the underlying contract to see who is covered. So if you had a form from a vendor and it said all persons or organizations as required by written contract, and you had a contract with that vendor, then you would be good to go. If you do not have something like that in place, then you would definitely want to make sure it's there. You may also see a scheduled endorsement. We encountered that scheduled word when we were talking about automobile liability. As I said, this would mean you're looking for a discrete list of the things that are covered. So if you're looking for a scheduled endorsement, you would actually see that it would say, this entity or that entity is covered. A waiver of transfer of rights of recovery. This is a waiver of subrogation endorsement. We already talked about what that means, but you can see an example of what this might look like. Again, this is an ISO form, but you may see a different type. Primary non-contributory. This is the other one that we haven't talked about yet. So in this case, basically a primary non-contributory endorsement is going to be indicating whose insurance is going to pay out first. So primary refers to the priority of coverage. Contributory would have to do with who is contributing to pay out for something. Non-contributory meaning that someone would not be contributing to coverage. So let's say that an accident happens at a property, the vendor has insurance, the landlord has insurance, there is a fight over whose insurance should step in and cover that accident. If you have a primary non-contributory endorsement, you may have had that vendor promise you that they are going to make their insurance cover it and that they are not going to go to your insurance to try to get you to help cover it as well. Notice of cancellation, we know what that is. It's just letting you guys know that a policy has been canceled or not renewed. This is just an example of what it would look like on a separate form if you did require this as a separate endorsement. So now we've gotten to the section for questions and answers. So I'm going to take a look at our Q&A, and I'm going to answer them as best as I can. So, can you send a copy of the recording? Yes, I believe we will be sending out a copy for everyone who attended. Also, I see that that came from someone at JLL. If you are a JLL employee, there is a copy of a very similar JLL specific recording on your internal My Learning. Is there an additional policy cost for the additional insured? Yes, there can be a cost to adding an additional insured. This does vary depending on the type of policy that the vendor or tenant has. If it's a really big company, then they probably can just slap on whatever name they need to do it. If this is like a mom and pop business, then it's probably going to cost them money. And like I said earlier, the easiest way to do this would be with a blanket additional insured and then have a contract with them. So some people also choose to have it that way. Let's see, as a landlord, would you require a waiver of subrogation from a tenant or contractor? Why? Yes, I do see this as a requirement all the time. That would be because you wouldn't want your vendor or tenant or contractor's insurance company coming after you to get you to cover negligence. So let's say that you're a tenant or contractor at a property, and that property is owned by me. Let's say that you have an accident and your insurance company takes care of whatever happened on that accident. I, the landlord, would not want your insurance company then coming after me to try to get me to pay out what they had paid out for covering your accident. So that would be why you would want to require a waiver of subrogation. How is automobile liability handled with regard to independent contractors who do not carry commercial auto coverage? So I feel free to email me if you want to talk about this further, and I will put my email up here. So independent contractors, you would definitely want to make sure that somebody carries automobile liability if they're going to be operating operating a vehicle on your property, but we can talk about that more offline if you would like to. But yeah, typically if somebody's going to be operating a vehicle, you might just want them to carry that. We do sometimes have subcontractors. They may have agreements with the contractors that may cover them. So there are kind of different ways that you can go about that. But I hope that provided some good answers for you guys. I think those are all of the questions that we have in the chat. This is my email. Please feel free to reach out to me if you would like to learn more about what we do here at Jones, or if you have any additional questions for me. I believe we will be sending out a recording of this webinar afterward. So keep an eye out for your inboxes from that. And I hope that this was useful for you. If you additionally have any feedback, we would love to hear it. So thank you so much for your time today. And I look forward to seeing your emails. Have a great rest of your day.